Morning all. How are we all doing? Morning Neo, morning Andres, morning Kennelly, Danny, Amy. Sorry. Morning JC, Ladder, AZ, Les. I got the best intro. Hey, spent a lot of time on that already. Morning Tom. Morning Martin, John, Virginia, Baggy, Day Trader. How we doing? Morning Peter. Right, so news today. We've got the OPEC meetings all day. So potentially big spike on oil at some point today when they come out the OPEC meetings and tell us what they decided they're going to do. 9:15, we've got Lagarde speaking. That's over an hour after the open. I very much doubt the market will sit around for an hour this morning. You never know, though. Main overnight news, obviously, was the New Zealand dollar interest rate. That came out at 5.5 as forecast. We were expecting that. So, and as I said yesterday, if it comes out as forecast, it'll probably be a negative. So it's dumped. So, yeah, move down on the New Zealand dollar. Not massive, as you can see. Aussie New Zealand and Euro New Zealand have hit ADR, but only just. So nothing dramatic off of that move. Helped my New Zealand dollar yen short out very nicely, which is good. But yeah, nothing particularly exciting on the news there. Same as yesterday with the Aussie 4.1 as expected, negative. So that's overnight. Non-farm employment we've got at 1:15 ahead of the New York Open. Then after the New York Open, we've got PMIs this afternoon. So it's going to be a very disrupted New York session this afternoon. If we get a massive amount of volatility on the non-farm employment change, the market will probably be exhausted at the open and won't be able to get anywhere. If we don't, the market will probably sit around and wait for the PMI figure before it does anything. So it might be a tricky one this afternoon. We'll see what happens, but you know, we can get a 2-hour move at the open. Job done, isn't it? So we'll see. They might move it before, but we'll see what happens. We'll have to wait and see what the volatility is like. We've got Lagarde speaking twice today. We had a little bit of bullishness come through from the ECB over the last couple of days. So Lagarde may well say something to rally the euro today. She's got 2 opportunities to do so. So we'll see what happens there. So that's today's news. Overnight, obviously, yesterday's big news was the intervention, which didn't happen, which was hilarious. It's always the way. So obviously, if there's anybody that has been asleep for the last 24 hours, the intervention I've been talking about happened yesterday. So there's your 5-minute candle for ADR. Basically happened in 1 minute, not 5, happened in 1 minute. So the intervention came in from Japan. Then immediately Japan turned around and said, I have no comment on whether Japan intervened in the FX market. Well, sorry, so maybe somebody just dropped a nuclear bomb on your bank or something, but I think it may have been you. So yeah, the intervention happened yesterday, as I've been saying for weeks. We were waiting for it to come. It finally came. Hasn't followed through yet, though. So we have pushed spikes down and we're holding. So I'm expecting today a rally off the yen. Some point during today, maybe London, maybe New York, don't know. But at some point, I'm expecting a continuation move. Other overnight news, we've had Yellen speaking, higher for longer rates is not a given. Whereas yesterday, we had somebody saying we're going to put the interest rates up. So if you go back here, Mester said yesterday, I am likely to favor a hike at the next meeting due to the current situation. And then you've got in the same breath from the same people, Yellen coming out and saying higher rates are not a given. Yeah, so where we are now, not necessarily going to be there for long. We may come down faster. And then you've got some other bloke in the Fed saying, I'm up for putting them up next month. You know, can't make any head or tail of what the Fed is up to. They don't know what they're doing. So McCarthy is getting booted out. I don't really think that's going to affect the markets, but New Zealand cash rate 5.5 or more Japanese. Here we go. So Japanese top currency diplomat Kanda, yields can also moved based on speculation. It might not have been us intervening. It might just been a speculative move by the banks. It has been normal not to announce their FX intervention. Yesterday you said you didn't do it. Any intervention would not target Forex levels but volatility. You said that yesterday. What did you do? Intervene. Oh, they must think we're stupid. The duration of excessive moves could be over 1 week or beyond that when asked what constitutes excessive moves in the FX market. Quite sure what that means by that, but if one-sided moves persist for a long time, that could be considered as excessive moves. So basically, they're saying, I mean, obviously, as I said yesterday, this was a shot across the bow saying, "Oi, stop it. We're intervening. You are not to push it any higher." So the question now is, what is going to happen with the US dollar? If we get loads and loads and loads of positive news coming out today, it could creep up. If it gets back up to there, they will do it again. Same as last time. It took 3 interventions last time for the market to sit up and listen and actually do something about it. Actually, it took 2. And the third one was the nail in the coffin. So this is the first. Could be enough, maybe not. We'll see. But I'm looking for this to continue. So I'm holding my shorts. DAX today. We've gapped down this morning. So we're running away from this gap. Market's really heavy still on this US dollar strength. We've got gap fills to do. This is the first time I've seen gaps being left this long. It's very irregular to have a gap. So this gap we put in 27th of July. We haven't come back and touched it yet. We didn't even manage to get through this propulsion move. Look, back up to that gap. Really weird. We don't leave gaps like that. There's one there, look, that was left for a while, but you know, we're talking 2 weeks, week and a bit. That's normal. Occasionally you get one that lasts for 2 or 3 weeks, but months, not normal. So this is a big gap we've got to fill there. We've got gaps left in place now from last week. Sorry, that's the week before last. That one filled. That one filled. Now we've got another one we've left this morning, which we seem to be absolutely cascading away from. So downside targets today on the DAX, very difficult because if you go out to you need to go out to the 4-hourly to see the next levels of support. We're just basically market's just about to open. We're just basically trading down into this chop. That is the ultimate low, which is 300 ADR away or so. That is that support there. So this whole area here is that support. So that's 150 ADR. So today, if we do go for a run to the downside, I can't see anywhere to stop apart from ADR plus. Upside, obviously, we're looking at the previous day's high, really. So you've got yesterday's low there, which is the gap fill to the upside. If we do the gap fill and run, you've got 150 ADR to the upside. There is this low here from Tuesday. We've got the monthly low as well. Sorry, from Monday. So there's resistance sort of just under ADR, failing that way above ADR. So we'll see where we go. Market's just about to open, pulling off the lows. Market is open, sorry. I'm short on the DAX. Yeah, short on the DAX at the open. A lot of volume coming in, but we'll see where we go. So this is the release candidate for the SIH EA, the Stock Index Hedge EA, which I'm testing today fully. I think there's a bug in it, which is very intermittent, which I can't find the cause of, to do with invalid TP setting, which I don't know why it's there, but and it's very intermittent. So not quite sure what to do about that one. But I need to test it a little bit more. It seems to be working fine so far this morning. And it seems to be when there's multiple instruments running at once, is when it tends to occasionally drop one and it just won't trades on one instrument. So don't know. Figure it out. So we'll see where the DAX goes. We'll have a look at the FX markets after that. Morning, Grills. Morning, Jerry. Morning, Derp. Nextly, I was interested to ask you what your return was using your ORB strategy, and do you apply that to the DAX on the Globex session? The DAX doesn't have a Globex session. Globex is the US markets. The last 2 months, I don't know. I couldn't tell you. I'd have to have a look at my P&Ls. Profitable. I don't know what it is, but don't know. Enough to pay the mortgage. So the DAX you trade in Frankfurt, the Dow, the S&P, and the NASDAQ you trade at the New York Open. GU down again? Yeah, it is this morning. We'll have a look at that in a sec. US dollar yen, yeah, that got intervened. We'll have a look at that in a sec. Morning, outro. So fairly quiet open so far. So there's no news basically until Lagarde at 9:15. So I don't think, where is she talking today? Let's have a look. Due to deliver pre-recorded opening remarks. Oh, right, okay. No press release, so no press conference rather. Columbia University. So we might get a bit of volatility out of that one. If there's questions. See. Okay, not a lot of movement on the DAX so far. So downside, ADR low basically. There's nothing supportive down here at all. So if this does break short, just be looking for a normal sort of trend day down to ADR really. Don't like that gap though. I'd rather have not been short this morning. But we'll see where that goes. There we go. So there's your 5-minute opening range. So if you're taking the 5-minute opening range break, those are your levels. For some reason, the ORB EA has decided not to draw today. Why have I got, what's happened there? Done something. Did fiddle about in here yesterday, so I suspect I've broken something. What I've done. Okay, not a lot happening. Let's have a quick look at the euro. A little bit meh this morning, isn't it? Be quiet. JV, morning. Good morning, India. Can't say what that is because I don't speak Indian. What are the blue lines? These are propulsion gaps. If you want to know about those, go to the support resistance propulsion page on the website. There's your link. Okay, DAX is a bit of a snail today. So we'll leave that for a minute and we'll come back and have a look at the FX stuff. While we're waiting for that, I'll monitor that over there. So today, so far, there's a lot of weeklies hit. So we're on Wednesday. There's an awful lot of weekly ranges hit so far. Obviously, we've had a lot of news this week. So yesterday's main, obviously, event was the Japanese intervention, which finally came. So across the board, obviously, everything came down against the yen in dramatic fashion. We had ADRs. I didn't actually look at the ADR dashboard, but obviously everything was over 225 ADR. So literally every single instrument would have been completely full on the ADR dash. So CAD yen there, we had 198 pips. ADR is 93. That's actually quite small, isn't it? So yeah, 200 ADRs across the board plus. So far, all that we've got is a test of the propulsion move. So the move down and the pullback was extremely fast. So the initial order that they placed was undone by 50% straight away, which tells me that they are holding shorts, because if they wanted to make a quick buck, they would have eaten all those orders and taken the whole lot off the table. So they're holding shorts, and there's your propulsion gap. So that's where the order is. So basically, at the moment this morning, it looks like they're adding in to the shorts. So if you look at all the FX pairs, I'll take my intervention measuring tool off. Technical term for a square. So as you can see, they're adding in to the positions this morning at the moment. So London are adding longs into the yen. Everything starting to trickle down again. So today, we only need 150 ADR on most of these to come back and retest that low. So that is easily on the cards today, if they do it. We need 200 ADR on the US dollar. So yens today, very easy play today would be taking a range break of Asia. So wherever your Asian lows are, so CAD yen, for example, is there. I mean, obviously that level there you could have taken. So reverse alerts have already gone in, as you can see there. But taking a range break today is a fairly safe trade, down to retest that low, and obviously then beyond. We don't know how far we're going to go. And we don't know if we definitely are going to go, basically, because it's down to the Japanese as to whether or not they want to continue this move. So that's obviously the main focal point today, is to see if we can get that continuation. I'd be surprised if we don't, but then again, the first intervention failed in September last year, didn't it? And then we had to put a second one in October. So the difference between now and then is then we were at 145 and they second interventioned at 150. This time round, we first interventioned at 150. So is there a 155 move on the cards? Don't know. That's what we'll find out over the next couple of days. Be surprised if they let it get above that level. That's kind of their line in the sand. Although they keep saying when they come out with their statements, levels are not what we're looking at. We're looking at volatility. It's funny that they do it at 150 every time, isn't it? So, tell us it's not levels as much as you like. Why did you do it at 150 again then, if you're not looking at levels? However, we did have a big volatile move. Remember I said yesterday in the live stream, I was like, oh, there's a big volatile move coming in. Remember what they said yesterday about the volatility? If that picks up, they'll be pumping it. Exactly when it happened. So it may be that if we get a push like that and a push like that and a push like that, that second intervention will come this afternoon. We'll wait and see what happens. So keep your eyes peeled on that. I'm holding all shorts on the yen against the yen at the moment. Aussie New Zealand has hit ADR today. So the Aussie, obviously yesterday we had the Aussie dollar news, which tanked the Aussie. This morning we've had the New Zealand dollar rate announcement, which came out as expected, which has tanked the New Zealand, which has obviously made the Aussie New Zealand rise. So that's just basically undone all the moves from yesterday. So it just shows you the New Zealand dollar has taken this news worse than the Australians did yesterday. So we should see a continued weakness on the New Zealand dollar. So if you're going to try and mean revert this one today, it is 125 ADR. We are up at yesterday's high. We have just tapped into that and we are just rejecting. So this could end up being just a pullback down into propulsion, in which case, obviously, take the reversal alert when you get it. and jump in short, which is just about to trigger literally now. You can hardly see it because there's a lot of stuff on the chart at the moment, but there's your support rectangle. Yeah, so we're just about to potentially, this candle, we've got 2.5 minutes, 3 minutes left on this candle. This closes bearish. That is your reversal. So that'll be your entry this morning. You have had an entry. If you're using the Market Reversal Alerts EA, you would have entered there on ADR. If you're using 100 ADR as an entry, you would have had a signal there to go short. So this would be your second entry. So Aussie New Zealand's extended. Euro New Zealand also on the New Zealand dollar weakness. Obviously Euro's popped. So this is basically, this spike obviously is the news. The reversal alert's already kicked in on that one, and it's come back down and retested propulsion. They've added back in. So looking for a continuation move, assuming we're going to get weakness in the New Zealand dollar moving through today. So that's everything on the ADRs. There's lots and lots of weeklies. There's no RSIs to look at. So the hourlies, there's nothing on RSI at the moment. The 4 hours, we've got a few, and it's the same old stuff. It's the pound US dollar. It's the US dollar CAD. It's everything that we've been watching that's extended. Oh, by the way, yesterday, if you didn't already, I went into my VPS yesterday and turned the Market Reversal Alerts EA off on all yen pairs. Yeah. So if you haven't done it already, make sure you do that, because you're going to see RSI extensions, obviously, potentially on these yen pairs. So if this pushes down today, you're going to get an RSI extension. Your EA is going to try and get you in long. And if you want to be long, that's fine. But I mean, if this comes down here, the potential, obviously, it's going to bounce back up before it puts a new leg in. So there's absolutely nothing wrong with taking a mean reversion on it. It's just if it does that over the next week or so, just be prepared to go into drawdown. So personally, I'm just not interested in longing it. Not after that. So it's the same old stuff on the 4 hours. No point in going through it again. We've been through it over and over again. US dollar CAD is massively extended. We know on the 4 hour, we're waiting for a pullback on this propulsion move. Yeah. Same with everything else. The US dollar, pound US dollar, still tanking. Putting back nicely this morning. Nice rejection so far at the open. So London opening not too bad. So Asia, we had another little drop there. Sorry, that's not Asia. This is the 4 hour chart. We were talking about this yesterday. Monday, we had a nice drop, obviously, we know about. We had an accumulation put in yesterday. We've just rejected the lows today. So if we break yesterday's high today, which it puts us up above ADR, we've got a good chance of a run starting. And we're looking to retest this level. So we're looking for this, basically this move on the US dollar to be over. So this turned out to be a profit take move, pullback, and then we got news again. It's news constantly that's killing this thing at the minute. It's this positive news we keep getting on this US dollar. We just need some negative news, and it will just flip, and it will go fast as well. We'll get multiple ADR hits in a row. Just not getting that news. So we've got the catalyst potentially coming up today. We've got the PMIs this afternoon, but obviously the PMIs from the manufacturing came out as positive on Monday. So the services could well be positive again today. So if we get another positive there, we're going to struggle again to get that move going. We've got no news on the pound coming up at all as a catalyst to help drive us. We've got GDP next Thursday. That's it. Before that, we've got PPI, which could again rally that US. So, God, look at next week's news. Might as well take the week off. Be an interesting week. DAX hedged. Just push back up again. So yeah, so it's all the usual stuff there. So we'll run through the weekly ranges today, and we'll have a look at those as opportunities because they're obviously extended on the weeklies. Morning, Marco. Since I have trades open for weeks now on US dollar yen, is it possible the support resistance indicator, the break-even line, adjusts with the swap? No. It doesn't. It just reads from your terminal, basically. Now showing the line, not including the swap. Yeah, no, it doesn't do that. Morning, Asta even. Waiting for the big move call again. You're not going to get a big move call from me today. There's very... Oh, there we go. It's moving. So, yeah, I mean, basically this move was obvious. It was coming. Well, it was obvious to me. But it was obvious to quite a few people, I think. There's no other... You can't call any other move like this because the Japanese are the only people that pre-warn us when they're going to do this. Everybody else keeps quiet, like the Swiss. They go, we're going to increase our interest rates to 2%. Then they go deadly quiet. And then they go 1.75. And everyone goes, whoa, and panics. And then it's out of the blue. The Japanese go, if you keep pushing us, we will push back. Yeah, and they've said it again this morning. Any more volatility, we'll do the same again. How much money did you use yesterday, Banks? Did you listen? No. Right. Are you going to listen this time? Yes. Good. They'll start buying the yen. You can't predict anything else apart from the yen because the Japanese are the only people that do this. So, but you have to milk it when you get it. You got to hold it. Yeah. And like I said last time, I've been saying it over and over and over again. Look at the last intervention and look at what happened after. The only thing we can do as traders is look at the past for clues as to the future. Yeah. So intervention 1 failed, but that was at 145. We got the warning shot and we moved this time round at 145. They pushed back from 145 and went up to 150. So we've already done the 145 move. Now we've just done the 150 move. There's your 150 move last time, which triggered at 152 after volatility. Again, what they said yesterday, if we get more volatility, we'll pump you. What did we get there? Volatility. What did we get yesterday? Volatility. Bang. Yeah, look what happened afterwards. 50% retracement on the move. Sideways for 2 weeks. Third intervention. Cascade. Yeah. So where we are now, intervention, 50% retracement. Quite possibly sideways for 2 weeks. But during that move, I would expect us to come down and retest this level and sit around for a bit. And then the Japanese to really hammer it home. For that to happen, we're going to need a little bit more weakness in that US. So I think that's what we are kind of waiting for at the moment. So, you can get out of all your shorts down here, and whether you get out of them down here when we get down here, assuming we will get down here, it's entirely up to you. You can go for the long-term reward, which may or may not come. It's the same as everything. Yeah, I have no idea. This could go up or down from here. I have no idea where it's going. All I can do is go on what's happened in the past. And in the past, we've had a massive tank after an intervention move. So, we don't know what's going to happen, do we? But I've got a load of shorts on. And if this does do what it did last time, I've got the opportunity to make somewhere in the region of 10 to 20% profit on this one move alone. So you don't get opportunities like this very often. All you can say is, this is a chance to make a massive impact on your balance. However, it may not work. So you've got to control risk. If it comes back up to there, I know what drawdown I'm going to be in. And I have the opportunity to close it all out there and go, crap, that intervention move didn't work. And I'll take a 3 to 5% loss with the, so, think about it in that way. It's a 3 to 5% loss for me with the potential to be about a 15, 20% profit. It's roughly around about a 4 to 1 risk reward ratio, isn't it? But we will see. We need clues, as to what they're going to do next. We don't know, but you can't call it. We can't call what's going to happen next. What I can say for sure is if we go back above that level, they will intervene again. I can guarantee you that. So that's your second option. If we get up to there, you can close it out or you can hold it through that drawdown, waiting for that second intervention. That second intervention will be bigger than that one. It will have to be. But it's unlikely. The market's scared to death. Yeah. So, look at the previous. So that's the 145 intervention. The Japanese didn't have to do it because the banks paid attention. Exactly the same move happened as last time. The 150 intervention. That is the point the banks paid attention last time. Yeah. So Looks like it, doesn't it? But, think about it, where we will be. Think about what happened last time. We put in a new low, put in a lower low. So, grab all the TPs from your positions and drag them down here. So that is 4%, 8%, 12%, roughly, 15%. Plus, I've got an extra add-on position I'm adding when we break that low, which will be somewhere in the region of 18% gain on the account, putting in that lower low. That's the intervention. That's where we went. So intervention 1, intervention 2, intervention 1, intervention 2, intervention 3. Yeah, I'm asking for a lower low on that. Last time we got all the way down there. I mean, you could hold it all the way down there, but you're going to need to hold it for, what's that, January? An entire year, basically. I'm not interested in holding it for a year. So, not a year, is it actually? It's what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks, 3 months. Yeah, 3-month holds to increase your account by 20% and pay off the year's mortgage. That's your options, isn't it? Trading's all about risk and reward. But we'll see. Long way away. But obviously you can get out, wait for a pullback, get in again, get out, wait for a pullback, get in again. Just keep shorting it. Just don't long it, basically, for 3 months. That's probably the best thing to do. Take profit, get out. Take profit, get out. Bank it along the way. Beginning of the indices, Dow, DAX have dropped approximately 6% over the last month. When was the last time you've seen such? Last US dollar rally. If you look at the DAX and everything, yeah, these moves that we're seeing at the moment are not abnormal. Look. It's happened multiple times. We're in a bear market still. The people are still saying we're entering back into a bull market. I don't think we are yet. Yeah, this is a bull market. That's a bull market. That's a bit of a bull market. This is a bull market. That's COVID. This is a bull market. That's a bear volatile market. This is not a bull market. That's not a bull market. That's not a bull market. That's a bull market. It's a bear market. We're in a thing. We're not in either. We're normally always in a bull market or a bear market. That's how the indices have always worked. The minute we're in complete turmoil because we've never been through a pandemic, we've never been through a recovery from a pandemic, we've never been through an interest rate rise for 18 months like we've just had. We've never been through inflation at these rates. We've never been through unemployment at these rates. We've never had housing prices move so fast during a period of stagnation. There's so much going on. We've never had a war kick off in the middle of all of this. These markets are not normal at all yet. So I don't see any reason why this shouldn't continue to come down at the moment. As long as that US dollar is strong. When the US dollar weakens, we will see more stock investment. Money will be pulled out of the US into the stocks and the stocks will rise. When's the US dollar going to weaken? I don't know. Should have weakened by now, but it's not stopping. It's not stopping. So, I don't know. There's nobody to fight the US dollar. This is the problem at the moment. If you look at the fundamentals, the reason this market is like it is at the moment is because there's no one to fight the US. Everybody else is stuffed still. And the US will always be stuffed along with everybody else because they're always ones that start the stuffing, if you like. And we always follow suit in the US. But the problem at the moment is there's nobody getting stronger. So the US is the first one to cause the problems, and it's the first one to recover. This isn't recovering. That's going up. That's not a recovery. That's, oh crap, it hasn't worked. This 5.5 isn't working. They can say what they like, but inflation is going up with interest rates at that height, and unemployment is going up. Everything is going the wrong way. Yeah. So the market will anticipate more intervention required by the US, which is bullish because their interest rate will become the highest. Therefore, the best place to put your money is in the US. You will buy more US dollar, the banks. Yeah. So this is why we're getting this rally. Until they turn around and say, that's it, we've done enough, we're not doing any more, 100% guarantee we ain't moving from here. Bang. But until they say that, like we had yesterday, as I used an example this morning, we get one guy coming out saying, I'm voting for an interest rate rise. We get the next guy coming out saying, I don't think we need to go up anymore. In fact, probably down sooner than we thought. Yeah, this guy and that guy cancel each other out. So the market just goes, all right, we'll carry on doing what we're doing. There's no fundamental to drive either way. Yeah, we're freezing interest rates here. We're freezing interest rates here. We're freezing interest rates here. What's happening? This is starting to slow. This will become, as it has in the US dollar CAD, a put on the brakes and tick back up again because we're freezing interest rates. They need to put these up more, but they're not doing it because they're scared about unemployment rates, and they should be because they're going up, which means that they struggle to put that up. So the whole market is sitting there sidelined and going, I've no idea what to do. So they don't do anything. They just carry on doing what they're doing. We need some negative news to drive the US dollar down and give everybody a chance to get those moves started in the opposite direction, but it's just not happening. Until that happens, there's no reason why the stock indices should recover. But I've never seen this before. No one has. No one on the planet's been through a pandemic recovery before. We're still in it. It's caused absolute fundamental chaos. Okay. Who knows? Franco, I'm really tired, back from my Florida vacation. Thank you. Good night. Another hurry up and wait session. Yeah, exactly. The usual. DAX is just a sideways mess so far this morning. DAX. Break even on both trades today. Good one, outro. But what about the threat of interest rate rises by the Fed? Does one negate the other? So levels maintain. Yeah, well, that's the whole thing. That's what drives it, interest rates. If you're in it isn't as simple as this, but in its simplest broken down for a 5-year-old form, it works the same as it does with your money in the bank. Yeah. If you've got, imagine these are all different banks in your country. Yeah. And you have 100 million that you need to put into a bank and you want to get the best return on your investment. Where do you put it? The place with the highest interest rate. Who has the highest interest rate at the moment? The US dollar. Okay. So where do you want to put your money if you have 100 billion saved and you want to bet the best return on your investment? You put it in the US dollar. Yeah. If the US dollar suddenly turns around and goes, well, in the next 6 months, we're going to drop this interest rate by 1%. What would you do with your money? Go, oh, okay. If they're going to drop their interest rate, who's looking at rising at the moment? Oh, the euro, they're still increasing theirs. I'll put it out there and pop it in the euro. In its simplest form, that is how the fundamentals work. There's a lot of other factors that influence this. But it's all to do with controlling this. So if this goes up, that goes up. When that goes up, which causes them to want to put that back down again. If they don't put that back down again fast enough and that continues to go up, businesses will start to fail, which means that that goes down. If that goes down, it causes that to go up. It's like scales, but you've got, if you're working in the Fed, you've got about 50 of them. You've got to try and keep them all balanced. These are the ones that cause the biggest impact. They're not changing. This is the problem. We're at this, it's kind of like a runaway train at the moment, where you've got this movement, which you've got in central banks at the moment. If you look at the last pound, I won't go back and look at it now, but if you look at the last pound announcement, we're the only country that releases the actual votes. So you have votes for people to increase, votes for people to decrease, and votes for people to stay the same. In our bank at the moment, 5 wanted an increase, 4 didn't. So it's that close. It's kind of 50-50 in central banks and governments at the moment as whether they will put it up or put it down. What that gives the market is a totally, completely mixed, unbiased, where the hell do we go kind of signal. So what does the market do? Nothing. It just goes with the momentum it's had until we get a fundamental shift, like with the Swiss franc. You get an interest rate change. Yeah. So when the interest rates change unexpectedly, you get a move. And it's like, bang, oh, yeah, interest rates. That wasn't what we were expecting. Let's change. This is what we're waiting for with the US dollar. We're waiting for the change. It's not coming. So it will. And then obviously what will happen is that massive profit take move will start, and they will start to scale out of all of the US dollar moves and bank all that cash. But normally you find they do it on a 4 to 12 week cycle. What we've had with the US dollar isn't a 4 to 12 week cycle. It's longer. I suppose it isn't actually. If you look at it, it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, this is week 12. So this is a quarter. This is a quarterly, market moves in monthly and quarterly cycles. This is a quarterly cycle. So in theory, could be it. We've got big news coming up this week. The main news we've got, which is going to impact it, is next week. It's the CPI figure. So when this comes out next week on Thursday, the CPI, if that CPI is positive, yeah, it's going to rally the US dollar. If that CPI is negative, it's going to dump it. And if that CPI comes out as negative, the Fed should turn around and say, I think we've done enough. And that is the point at which we will get that cycle shift. Indices will start to fly up. US dollar will start to come down. But if that doesn't come out that way, the market will just carry on doing what it's doing, which isn't normal. This is not normal. Nothing's normal. Hasn't been normal for 3 years, but it's getting more and more abnormal because we're getting to the point where we're expecting something to happen, which isn't. So it's even more abnormal than normal. Morning, Rajiv. US start the stuffing. Looks like you're referring to the Christmas turkey. Yeah, I mean, and this is the other thing. You normally experience what we call the Santa rally at Christmas. Going into December, we get a big rally on the stock market. Is that going to happen this year? I don't know. Look at last year. Go back to December last year. Yeah, we get the normal Santa rally, which starts in December. Oh, that was December last year. That's not normal either, is it? We get a Santa rally every year. We always do. It's got a name. It's the Santa rally. It's been in the stock market for decades. Didn't get it. This is just not normal. The markets is just abnormal at the moment and very, very hard to read and predict. You have to adapt and survive, basically. Commodities will be more bullish than stocks. Could be in the next few years. It's where the market needs to put its money. The market will put its money where it is the safest place. Yeah. So when you're in a banking institution, you have to return an 8 to 12% return. You put it wherever is safest at the moment. The trouble is, where is safe at the moment? You can't put it into gold because Russia holds more than 50% of the stockpile of gold, and there's an import-export ban. Gold's out of the question. The Swiss franc is normally the safest place to put it, but it's put its interest rates up. We haven't done that for decades. That's not very safe. The yen, 0.1%. Interest rates has been for 6 years. Brilliant. Let's stick it in there because that's always been a safe place to put it. Last 2 months, they've been talking about putting their interest rates up. Oh, hang on, that's not the right place, is it? Where else do we put it? The US dollar. Well, they're in all sorts of trouble. There's just nowhere safe to put your money at the moment. Oil, brilliant. It's going up really, really high. We're looking at another $100 a barrel. But what happens when we get to $100 a barrel? Over the next few years, we're moving away from petrol into full electric for cars. What's the demand going to be like for oil? What's going to happen to oil prices? You can't put it in that. Where'd you put it? Where'd you put your money now? There isn't a safe haven anymore. There's nowhere you can put it which is safe. Stock market, always been the traditional place you put it. Yeah, which is why the S&P returns on average 8% a year, because it's manufactured to incline. That's why all the banks and institutions and the pension funds invest in the S&P 500. Because if you want to put it somewhere safe, you put it in the top 500 companies in the US. Because what do? Non-stop money making. what happens to their share price? Non-stop going up. Safest thing to do, but you're only going to get an 8% return. So, but you can't put it in the stock market while the US dollar's rallying, which it is. Yeah, this is the problem. It's not, it's not us. It's the banks, institutions. Everybody's got the same issue at the moment. This thing's all broken at the moment. And God forbid if we get a housing spiral start, another housing price crash, which is typically what comes after we start to go into recession. It's even more complicated. So at the end of the day, your best thing you can do is to go down onto low time frames and just basically trade the volume on the stock markets and go, hopefully I can get in and out every day within an hour and bank some money enough. Because that's probably the safest thing to do at the moment, isn't it? We're always going to get volatility here because that's what it does. It opens every day and it gives us volatility. So probably the safest thing to do at the minute. Anyway, doom and gloom. Non-farm payroll, Dallas says. Yeah, so non-farm payroll could be the factor this week. It's the unemployment rate rather than the non-farm payroll, which is the driver. We just call it non-farm payroll because I don't know why. I don't even know why they started calling it non-farm payroll, but that's what the market is moving on. This is what it's interested. This is the key driver. So yeah, unemployment rates. This could be it. If they go up, yeah. If we get PMIs down today and we get unemployment up, that puts pressure on not increasing that interest rate and needing to move it down faster. Negative US. Could be this week, couldn't it? As I say, we're on the end of the 12-week cycle as well. So it's called the new normal. Yeah. The new norm. Confusion and delay. Bitcoin 4-year bull run is coming. God. I think you're in the wrong channel, Stephen. Go and buy it, though. Go and buy it. Definitely go and buy it. Go and buy Bitcoin. There's a channel I follow who called a Bitcoin buy down here or something last week. You should have seen his channel. Hey guys, I was so right about this, blah, 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 blah. This is the start of the next Bitcoin one. Oh, bugger. Don't get me started on Bitcoin. The best thing you can do, Stephen, if you want to trade that, go and use binary options. If you can still find a binary option con man broker out there, use them. You've got much more chance of making money. Seriously. Stop talking about crypto crap. Right. Normal stuff that can actually work. Aussie dollar Swiss. Weekly range. So we are at the weekly range. I've got a buy on this one already. Let me just draw a line on where our weekly is. Where are we? Wednesday, aren't we? So weekly high. So that's your weekly range hit. We got this hit yesterday on the Aussie dollar Swiss. Reversal, that's just gone in on the hourly. So looking for a pullback play on this one. It's a bullish run that we're in at the moment. So this is a nice retracement, 38 retracement for a continuation move to the upside. However, this Swiss franc, I suspect, will probably power up at some point. So I'm long on it from an H1 M5 mean reversion entry anyway, looking for a pullback up into there. So if this structure is going to hold, that's the sort of move I'm looking for. If we get up to 50% though, and run into that accumulation and start to get into trouble, I'll probably exit there. So, but at the moment, I'm targeting that propulsion gap to the upside. They haven't quite tapped the bottom of this yet, so they are rebuying this area. So I suspect we might get a bit of movement more to the upside on that one. Aussie dollar yen, as we know, that's extended to the downside. Not interested in longs on that at all. Aussie US. This one I'm into at the moment, looking for a pullback up into propulsion. Again, US dollar, we've been talking about this all morning anyway, but we're waiting for some negative news to come through and follow that through. So get that move started, basically, just not kicking in at the moment. So too long on that. We've got a propulsion gap there, which is kind of just part of this move. There's not really any good targets here. This accumulation break that we had on Monday is probably the strongest area of resistance to the upside. That's what we've tested, and they added to the positions there. So that's where I'm targeting a pullback on that, which is a 61.871 retracement back up into there. Reversal alerts kicked in, retest has happened as well. So there's your W pattern reversal on the hourly, and obviously it's an H1 RSI extension as well. So that's a good looking long. CAD yen, again, not interested. Swiss yen, not interested. Up to you if you want to try and buy these things, but I'm certainly not interested in buying anything against the yen at the minute. Pound yen, no. New Zealand yen, already short. US dollar yen we know about, that's the big one. And US dollar CAD, which we've looked at, is already extended. So that's a 4-hour RSI extension. I got in on the hourly RSI extension on Monday with first entry short, looking for a 50% retracement coming down into these propulsion gaps. This massive propulsion gap, this is one big propulsion gap, this move here, is potentially, this is the previous area of balance. So if this is a price discovery move, we would expect to come back down and retest the high of that and then see if the price discovery succeeds. If it fails, it will come back into balance. So I'm just targeting half of this move at the moment, the downside, which is more than enough. But that's extended. That's its normal weekly range done. Obviously, that Friday move that we had kicked this off. So we had a big, more than ADR move there, 150 ADR move, followed by a push up. That's given us our extension. We're only just extended, though. 150 is the weekly range. But always a caveat with these when you come out of September, well, come out of summer trading, which this year seems to be September. That's the other thing we've had that's weird this year, isn't it? August, summer trading. September, volatility spikes. August, summer trading. September, lower than summer trading. No volatility spikes. Coming into October, looks like we're starting to pick up. So these are all out. All of these average weekly ranges are contracted. All of these average daily ranges are contracted. So you're going to see bigger than normal moves on these instruments because they're set up for normal price movement. So these moves could continue further, but again, we'll wait and see if we get any news. So there's a few opportunities there. Anything that's not yen based is a good mean reversion opportunity, but everything there is also triggered on the hourly RSI extensions anyway this week. So you should already be in them if you're trading H1 RSI extensions anyway. So or ADR reversals, because we've had ADRs on all of these as well. So yeah, some decent moves. The yen at the moment is continuing, so they are adding back in today. So there we go. That low, once that's broken, targets for support are going to be down there. But I mean, nothing's really going to stop this today. This could easily be back down there today, 200 ADR. If we get the PMI figures coming out as negative today, that's just going to pull money out of the US dollar. Where are they going to want to put it at the moment? The yen. So there's absolutely no reason why this won't be down here if we get negative PMI news this afternoon. So just keep your eyes peeled on this afternoon at 3 o'clock. Well, I'll be here anyway for the New York session, but be watching that this afternoon. If we get a negative on that, off we go. Non-farm employment, obviously, this gives us a clue as to Friday. So if this comes out as a positive number, obviously that's going to be bullish for the US, and that gives us a clue as to what happens there. Quite often we get the same readings across the two. So you can see there we've got 4 positives and a negative. I'm not actually sure that's true at the moment. Yeah, I mean, it's not as aligned at the moment if you look at it as it usually is. So it's a bit tricky to use as a gauge at the moment, I think, like everything is. But unemployment claims tomorrow as well. So everything's about employment this week. So there's lots of things coming up which could upset the apple cart for the US. And obviously, if that money does come out of the US, it's likely to go back into the yen, which will spur this movement on. And if we can get down to these lows, this is where we're going to find the critical reaction. Are we going to hold this, or are we going to break it? If we break it, the market will jump on board that yen fast, and that move will be exactly the same as we saw before, basically. Yeah. I mean, this is a normal bank move over a week. Yeah. So we will see a down candle. Imagine a down candle on a week, a big bear candle on a weekly chart. That's what you're experiencing there. That's what you're going to get there. So we'll be down here in no time at all. But we'll see. It's all down to the banks. So far this morning, it looks like they're jumping on board, which I would expect. So all good. If I saw it correctly, you are not hedged. No, I am hedged. On the DAX, you mean? Yeah, I'm hedged on the DAX. I got hedged there. Look. And there. We haven't gone anywhere. So I'll wait for the day to play out, basically. That's, and if we are going to rally up, that's initial target, obviously gap fill. My target is up at 5R. Let me just adjust the targets. So yeah, I mean, that propulsion gap is where I would rather have my target. I'm just going to move my targets down into propulsion for the upside. So that's roughly 4R, 4.5R to the upside. So assuming we get through the gap fill today, so market structure low, high, higher low, looking to come up into this propulsion gap to retest this level, assuming we get some US dollar weakness. And if that yen continues to rally, that US dollar probably will come down, which will drive all the indexes up. And that's the other thing you've got to be aware of. If that happens, we could easily have a 200 ADR day on the indices as well, which means that that is not the right place to take profit. But we've got this previous support, yeah, which has turned into resistance. Yeah, and that has formed yesterday's high. Sorry, no, it hasn't. That's the previous day's low. Why is that line there? That's not right, is it? Oh, it's the previous day's low. Yeah, sorry. I've got period separators on here, have I? This is what's confusing me. There we go. That makes sense now. Yeah, so that's the previous day's low there, that dotted line, which is this one here. So that is your support, resistance. So that's 5R. So I'm putting my target just below that in this propulsion gap there, which we tested, and rallied away from. Yeah. So if we get up to this level, we're likely to find some resistance in the form of sellers at that level. So all I'm doing is looking for a pullback to make some money. Yeah. So I'm going to get out of the longs, enter additional shorts on a sign of weakness, and then aim to get out of the short and that short together to just to bank a little bit of money on it, because it's a hedge. The whole idea of hedging isn't to make money, it's to stop losing money. Yeah. So traditional stop loss strategies, while they're very, very good on the break, and if you get good movement after the break, which has failed a couple of times, will make you nice money, which is what the opening range breakout EA does. The idea of hedging is, okay, we got it wrong today because there wasn't an opportunity to make money. So let's not hemorrhage cash today. Let's wait and see where price goes. If price gives us an opportunity to get out, we'll make money. If it doesn't give us an opportunity to get out, we just walk away with a small loss. That's it. That's the whole purpose of the hedging, is to stop you over trading and stop you losing money, which is much nicer. It's a much more comfortable way of trading. So that's the upside target. Downside, obviously, as I said, there isn't anything on the DAX today to the downside. We've got no support anywhere to look at. If you look at the DAX at the moment, you've got to go out to the 4-hour chart to find anything of any interest. So it's this area of chop, basically here. Yeah, it's this area of chop, basically, where we are. So you can see we are currently trading here. Yeah. So there's not really a level you can go, oh, that's an obvious support resistance. We've got an obvious level down here, which is this line I've got drawn on, which is absolutely miles away. We're not getting down there today. So you've got to try and pick somewhere. There's a level there, but it's only tapped into once. It's not really a good support resistance. You've got a level there. Not really a good support. It's better. We tapped into it, came down, we tapped up into it, paused, we came back down, we closed at that level. So that's better than that. And then you've got all these wicks down here, which could be absolutely anything. So if you look at that line, which is that support, that's probably the closest we can see today. And then look for where that lies within ADR. So downside, I would say probably somewhere around there is a good target. By the time that is hit, if it flies through it, it's running into ADR, which is when we start to get exhaustion. So that looks like a good downside target. So somewhere just above ADR today for the downside is probably the best thing to do, which is kind of where I am. So if we go something like 4R, we can get down to there, have a go and exit short down there. But not very easy today. Obviously, the open's crap. We've got Lagarde speaking in half an hour at 9:15. So she might jivvy up the euro, and obviously the euro is what the DAX is priced in. So if the euro pumps, the DAX will drop. If the euro dumps the pump, the DAX will pump. So we may get a little bit of movement off of that at 9:15. Not easy today, is it? One of them days. UJ getting its to its lows from last night, hopefully on its way. So we've tapped into the lows basically that we got to yesterday. So that's where we kind of finished off yesterday. So that area there, basically, as soon as we break that, really, and we're on our way to ADR, we could easily drop very quickly today. Very hard, these moves. You know, there's not a lot the banks can do to push back against them. This is the thing about an intervention move from the Japanese. It's like an unstoppable force. They're standing there with a load of submachine guns and you're running at them with knives. You're not going to stand a chance, basically. So they pumped billions into this yesterday, and they are holding that position short. We know they're holding the position short because it's a down candle. They're holding. They've scaled out of good 50% of it, but they're holding. So if they're holding and they're short, they're going to do everything in their power to stop you getting up. There's an iceberg order sitting there with Japanese yen being bought every time you hit it. This is what propulsion gaps are. They're iceberg orders. Yeah, they bounce from them because that's where the market moved previously. When you get back to it, if the market is still long, they won't let you through. That's their job, to make money. Yeah, so it's unlikely we will push through that. It's going to take some serious pressure to get through there from the US dollar. It's not going to be a case of people selling the yen off hard. It's going to be the US dollar is going to need a serious amount of buying. The only way it's going to get that is if the market is interested in investing in it with decent fundamental news that comes out. PMIs this afternoon, if they go up again, it's going to put pressure on the Fed to increase that interest rate. Yes, you will be buying it. It's going to struggle to get through it, but it will. It did last time. So the other thing you don't know as well is how much ammunition they've got. Yeah, it takes a lot of intervention from the Bank of Japan to do that. A lot of money. There is only a limited supply of it. Yeah, you can't just continuously print money like the Fed does. It just doesn't work. So, you know, it could be that was their one and only shot, and they will have to deal with something a bit later on. You know, I don't know. It's very difficult to tell. We don't get them very often. There's not enough data to go back and say, right, this has happened 16 times in the past. Every time it's happened, this is the outcome. Can't do that, can you? Fortunately. Outro. I think the DAX is broken. It's not broken. It's just not going anywhere. They're not interested today, are they? See what happens when we get the gap fill. I mean, I suspect what you'll see is a push and then a pull. And then when we get back into roughly an hour and a half in, we'll probably get a second wind. But, you know, it could be a rotation day. Yeah. If it is, it is. You don't make money on rotation days. That's just part of the game. That's part of the strategy. Like with a trend strategy, you don't make money in the ranges. With a mean reversion strategy or a breakout strategy, you don't make money in ranges. With a breakout strategy on indices, you don't make money in ranges, and ranges are rotations. So you make your money on the big breaks, you lose your money on the rotations. Everything's got a failure rate. Every strategy has a point where it just goes, can't make money on that market condition. So if you knew what the market condition is, you wouldn't use that strategy. But if you knew that, you would be a billionaire. Which is why people like Warren Buffett just buy the S&P, because that's pretty much guaranteed to go up all the time. I'd be interested to see, actually, does anybody know what Warren Buffett is doing at the moment? Because Warren Buffett's strategy is very simple. It's the same strategy as I've got the market reversal alerts EA running on the S&P, which is buy the dips. What's he doing at the minute? How's he making money? I haven't looked at his firm to see what he's doing at the moment, because his traditional strategy ain't working. So he just buys it, 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 gets to here and goes 8 to 12%. Thank you very much. And that's what he does every year and has done for decades. What's he been doing since 2021? Be interesting to see what his wealth is now, because it ain't working. So has he gone into sell it, sell it, sell it, sell it, sell it? In which case, that's a hell of a drawdown, isn't it? Sell it, not making any money for 2 months. Sell it, in drawdown, just about break even. Doesn't work, does it? He did some selling, yeah. Probably selling properties, I'd imagine. Don't know, but certainly not working, is it? The old Warren Buffett, Larry Williams strategies. Very simple. It's not hard, is it? You just buy every dip in the S&P and you will make money. What it's always done. It's how it's always been. Then COVID hit. Then we had the stupid rally where everyone was losing money in corporate and the stock prices went up. Oh, shit, we've broken it. Where we are now. What do you do? Warren's never had to deal with this, has he? How the hell does he expect the rest of us to deal with it? Anyway, we will see. Buffett buying into Chinese electrical car market. Quite possibly. That's more of an investment, isn't it? So he's moved out of index purchasing and moved into individual stock sectors. The obvious thing to do, isn't it? Sector purchase. But look at the NASDAQ, yeah? So I'd imagine a lot of those Chinese electrical car markets are linked to electronics companies, which will be floated in the NASDAQ. Which is faring better, isn't it, actually, when you look at it? It is faring better, isn't it, the NASDAQ, than the others. That is looking a bit more like a bull market. Well, I say it was looking a bit more like a bull market. Looking a bit like a flag break, ready to go, isn't it now? Who knows? It'll be in bricks, I reckon. Rights, I think. Don't pay enough attention to it. And him. Right, I'll leave it there today. Anything you need, I'll be in Telegram. I'm writing the manual for the hedging EA today. Fun. So I've got some final testing to do. I might change the way TPs are placed to try and get over this little bug that keeps creeping in intermittently. Intermittent bugs are bloody annoying because they're intermittent. You can't go, oh, that's what causes it. It's like works 5 days and then all of a sudden one day it goes, I'm not going to bother working on that one. It's like, why? No information. So intermittent bugs, you kind of have to just guesstimate at. So I'm going to have a look at a possible different way of calculating TPs and placing TPs, because it seems to me that it's a TP related issue, because I'm not using stop losses, so it doesn't need to calculate a stop loss, and it said it had a stop loss TP calculation problem. So it can't be stop loss, it's got to be TP. So therefore, makes logical sense to look at the way the TP is placed. So I'm going to look at that today, but I'm going to get the manual written. Once the manual's written, I'll probably get the MT4 version out. And then obviously MT5 version will come after. But yeah, so that's my job this morning, getting that done. And then I've got to do a video because people don't read manuals. So I'll do a video reading the manual, and then basically hopefully people can use the one they want. We'll see. We're men, we don't read anything, do we? We just do. It breaks, we go, why did that break? Oh, because I should have done that. Now it works. If only we read that first, we'd all be so much better off, wouldn't we? Right, I'm going to leave it there. I'll be back this afternoon, 2:20 for the New York session. Anything you need, come into Telegram. I will be in there. Keep your eyes peeled on the ADRs and RSIs today, but I think the majority of today's move will be focused around this yen. So we'll see how we get on with the yen moves today. It's looking like it wants to do that, doesn't it? So we'll see. But we got news coming out this afternoon. 1:15, focus on that as well. That's your non-farm employment change, 1:15. So we'll get some movement off the US there. And then 3 o'clock this afternoon, while we're on, we'll be looking at the PMIs. All right, so have a good morning. Anything you need, I'll be in Telegram. Otherwise, see you this afternoon, 2:20. If not, see you tomorrow morning at 7:50. Have a good day.